Hello everyone, and thank you guys for tuning back into the channel. So I have a very important announcement to make, and that is that I had a loss this week, and that loss made me realize that if I want to continue progressing the account and not just risk blowing it up, I need to be trading a little bit more conservative. And that being said, I have decided to limit my naked option trades since they are a lot riskier. I won't completely stop trading naked options. Like if I see the opportunity, I'll take it, but I won't go out of my way to try and force a trade to happen to make a bigger gain. What I will be doing instead is focusing more on credit spreads. And if you don't know what they are, I'll link a video of me explaining them in the description of this one. But they're basically an option strategy that has a higher success rate than trading naked options. But now that I've explained that, I'll get into the trades that I made this week. Don't mind the AMD calls that are going to expire worthless tomorrow because they're actually part of a credit spread that I closed out today, but I'll get more into that next video. But this video I'm going to explain two trades, a trade that I did on BABA and another one that I did on CSCO. So the BAB trade was the loss I had this week, and we go down to the history. Yeah, we can see that I had a lot of sell orders because I was trying to get filled and cut losses, but I just wasn't able to. But originally what I had planned to do was buy a put, which I did. I bought it at 5:30. It just didn't play out, however, so I ended up selling the next day at market open. You guys can see that I tried getting out a little bit higher, but I just wasn't able to get out. I wasn't getting filled. We ended up getting filled at 355, and we cut losses for around, I think it was around 160, 165. But I'll get more into this trade once we pull up the chart. And the second trade that I made was on CSCO, and this trade actually helped me recover from the BAB trade. And what I did on this trade was I entered a credit spread, and like I said, a credit spread is a option strategy when you make money when the options actually lose value. And so we can go down here. I entered the first portion of the trade. I entered 16 contracts for a credit of 0.12, and then I ended up buying 14 more contracts at 0.12 a couple days later. I think it was like one day later. So in total we had 30 contracts at a for total credit of 0.12 each contract, if that makes sense. And so we ended up closing the trade at 0.5, so we profited the difference. So 0.5 minus 0.12 is 0.07, so our profit was 30 times 0.07, which comes out to be roughly around 260, I believe, which was how much we actually made. But that trade and the trade that I currently closed out, the AMD one, helped me end the week so far in the green. So now I'll go ahead and switch over to the TD Ameritrade charts and kind of explain a little bit further into what I saw in these two trades. So this is the BAB chart I was looking at, and this was on the 15th, and you guys can see that on the morning at market open, it was kind of just trading sideways. We can see that it was trading at a low of 170.80, and then all of a sudden, with no news and no catalyst, it began to rise, and it got overextended pretty quickly. In about an hour and a half, it rose all the way from 170.80 all the way to 173.50s. And so I was looking for a spot to be able to buy a put on this, and I saw that it was topping out over here around the 173.50 area, and the RSI was pretty oversold. So I was looking for a confirmation to enter the trade, and after it topped out at around the 173.50 area, you can see that we got a big red candle coming down, and it got rejected, and it wasn't able to cross over that 173.50 area. It got as high as 173.47, and so this to me indicated that a downtrend reversal was going to happen, and that's when I entered my put position. And you guys can see that after that big red candle, it did drop a little. It dropped all the way down to around 172.57. However, the reversal did not end up happening. As you guys can see, it traded sideways and then it continued to rise. You guys can see that once again right here, it tried to break over that 173.45 area. No, it tried to break over the 173.50 resistance, but it got rejected, and there was a little red candle here. However, we continue to look at the day. We can see that it did end up crossing that 173.50 area, and so the trade did not play out as I wanted to, and that's something that I want to specify, that sometimes even if the chart indicates a reversal, like in this case, you can see that there's a big red candle after it wasn't able to break resistance. The chart is not always going to play out, and that's just something that we need to be able to understand, and that's why I held through the night, because I was going to give it a little bit more time since I still had a time and the option was in the money. But once I saw that on Tuesday morning it was trading around the same levels, which was the 173.50 area, I decided to take a loss and cut my losses so I didn't have to potentially lose more. And you guys can see that it ended up even spiking more, as high as 175. So overall, on this trade, I got unlucky. Like, the chart did show a reversal, but if we go ahead and zoom out, we can see that it ended up going even higher, as high as 176. So I'm not too mad, because I stayed persistent in cutting losses quickly, and that's what you have to do when you are in a bad trade. You know, cut losses and not make the losses cut into your account more, if that makes sense. So that's pretty much it for this trade. Now I'll go into the CSCO trade. So this is the CSCO chart, and what I noticed on this chart was that on Monday it crossed over its 52-week high, and in this green candle we can see it got as high as 58.23. However, it was rejected from that area, and you can see that right after it hit that 52-week high, a big red candle appeared, and that after that it just kind of traded sideways. So what I ended up doing on this trade was that I ended up entering a call credit spread, which in other words meant that I believed that the price of CSCO was not going to go over 58.50. And so if we can see how it played out, you can see that once again on Tuesday it got near that 58.26 area, and it made a new high. However, it did get rejected again, and if you guys remember, I purchased 16 more contracts on Tuesday the following day, so I increased my position in this. And if we can see how it played out, it continued to try to break over that black line, which is the resistance, and the 52-week high of around 58.30. However, it kept on getting rejected each and every time, and if we zoom out, we can see that the chart on this played exactly in our favor. It continued to drop after being rejected from the 58.26 area, and as of now it's still dropping, but I ended up closing my position, I think it was on the 17th, so right around here. And overall, like I said, the trade was around a 260 profit, so this made me end in the green overall from the last trade, which I lost around 160, 165. And the AMD trade, which I also won money in, I'll explain that in the next video, because I don't want to make this trading video too long. But that's pretty much it for this video. I hope you guys enjoyed, and I will see you guys in the next one.